Hey there, and welcome to the first video in our personal finance series, Budgeting Basics, Take Control of Your Money. I'm Sarah, the owner and founder of SR Digital Shop, a great place to find both budgeting and planning templates to use in your busy daily life. Today, we're diving into the foundation of financial success, budgeting. I'm sure you've probably heard it before from somebody on TV in finance, that influencer on your Instagram feed, or your mother. You need a budget. But maybe you're thinking, budgeting sounds so restrictive. I have to fit into these little boxes in these categories, and there's no room for my needs or wants. Or perhaps you're thinking, I don't make enough money to budget. That's what somebody that's so wealthy has to use. I'm just trying to get by. Or my personal favorite, I'm not good with numbers. I hated math in school and I hate math now. Well, I'm here to change your perspective. Budgeting is not about limiting your freedom, it's about giving you more freedom by understanding where your money goes. So, what is a budget? At its core, a budget is simply a plan for your money. It's tracking your income, money in, and deciding in advance where that money will go before you spend it. Money out. Just think of budgeting like GPS for your finances. Without it, you're wandering around hoping you'll reach your destination or your goal. With it, you have a clear direction to your financial goal. Now, why does budgeting matter? Why should you care about budgeting? Here's what creating and sticking to a budget can do for you. First, it can help eliminate financial stress. No more wondering if you can pay your bills. You can see it right in front of you, how much you're making and how much you're spending and where it's going. So you know what you have to cover. Next, it'll help you save for your goals. That could be your next summer vacation, a down payment for a home, or your retirement. Then it can prevent overspending. That's because it can make you more aware of your habits. You see where your money is going each month. And then if you want it to go in a different direction, this helps you be more mindful of where you're spending your money day to day. It also prepares you for emergencies. Being able to set aside some funds to set up a safety net or an emergency fund, rainy day fund, budgeting can help you do that. Finally, the big one, it helps you create financial freedom. Yes, budgeting actually gives you more freedom. That's because you decide what your budget is going to look like, what works for you. You get to decide where your money goes versus your money just going. Now, let's create our first budget. This is a very simple process in this case. This is perfect for beginners. Let's break down how to create your first budget in just 5 simple steps. The first step, calculate your income. This means money you receive after taxes. So the paycheck that comes from your job, the money you get from your side hustle, all of those things need to be included. But you're saying, wait, Sarah, I make variable income. I work for myself. I'm a freelancer. I don't know what I'm going to make each month. That's okay. If your income varies from month to month, use an average of the last 12 months or your lowest typical months to stay conservative to calculate this amount. So, what's next? The next step is to list all of your expenses. Now, yes, this one is a little more tedious because you want to track everything you've spent money on. A good rule of thumb is to use the last 2 to 3 months of bank and credit card statements to catch everything you've spent money on. And you may even have to go into your Venmo account potentially. If you have multiple bank accounts, you might want to go into your PayPal or other places to look and see. You're going to list out 3 main categories. Fixed expenses, that's things like your mortgage payment, your car payment, student loans, etc. Then the next category is all of your variable expenses. Those are the things that aren't a fixed amount month to month. That's your groceries, your utilities, your transportation costs like gasoline, entertainment, dining out, etc. Finally, you have what are called periodic expenses. They happen every year, and maybe they're on a set schedule, but they're not every month. Think things like car maintenance, that's once a quarter maybe, medical costs, holiday gifts like Christmas, Hanukkah, birthdays, anniversaries, right? Those would be under periodic. So now you've listed everything. Perfect. Step 3. Look at everything you have. All the money in, less all the money out, right? You've got that number in mind. Now, let's set some financial goals. What are you working towards? Do you want to create an emergency fund? In good times, a good rule of thumb is 3 to 6 months of expenses set aside. In bad times, 9 to 12 months is good. Or are you looking to pay off your car loan, your student loans, your mortgage, debt payoff? Do you want to create a travel fund so you're not using your credit card every time you want to go on vacation and then worrying about paying it later? Are you trying to get your first down payment for your first home? And of course, the best, retirement savings. All of these goals, as many as you are having or as few as you are having, you need to assign a specific dollar amount to it and then a time frame. So maybe creating an emergency fund may take you 12 months, let's say, or 18 months, right? But things like debt payment, down payments for a house, retirement savings, those are long-term goals. Those goals can be years, and in some cases like retirement or paying off your mortgage, are decades long. Just do your best guess on estimating it. It's just so that we have a frame of reference for what your goals are, the amount you think you need, and then also the time frame. Okay, on to step 4. Now that we've got all this information, we're going to create a budget plan. Now, this is where things get a little bit tricky because you have to balance your needs versus your wants, right? So, the formula, though, to create this information is simple. It's income, so all the money in, less expenses, all the money out, and savings, right? So that's also part of the expenses, the savings. So that will equal 0 then. It's zero-based budgeting where every dollar has a job. And if the equation doesn't balance, as in you have more expenses than income, then you have to look at doing a few things. Number 1, cutting expenses. Are you eating out 5 times a week? Could you eat at home more cheaply? Maybe you do that. Cut 2 days out. Or increase your income. So you increase the side that makes you more money. Maybe you start a side hustle online or driving for Uber or whatever works for you or your family. Okay. And then the third option to make this formula work for you and your family is possibly adjusting your savings goals. So let's say you have a savings goal of $80,000 for a down payment for a house because you want a house that is $750,000, and that's not going to work. So you adjust the amount you're saving. It'll take you a little longer, but it'll help you balance this budget basically. Finally, you've got your budget, right? You know what your income is, you know what your expenses are, your savings amounts, and everything balances. You are done, right? No. Budgets are not a set it and forget it. You still need to track your spending. That means check in and see where your money is going. Is it matching what you wrote down? We wrote down what we want to spend and where we're spending it. Do your credit card and bank statements match that? In finance, we call that auditing. So it's basically comparing what you proposed versus what's actually happening. Then you need to say, oh, am I overspending in a category that I thought I was going to make cuts in? So I need to make adjustments. It means or do I need to raise an amount on a line because my budget is out of whack? The number needs to be higher because it actually just costs more. So you refine your budget. This doesn't have to take a long time. This is just, I look at the numbers on the one side, I look at what I did for my budget, And then I make a quick decision on increasing or decreasing and you refine it. We're talking less than 30 minutes to an hour a month. Okay. Just know that your first budget is not going to be perfect. I've been budgeting for my family for 2 decades and it's still not perfect because life is always throwing you curveballs. So don't worry about being perfection. We just want to keep trying over and over to hone and improve it so it's closer and closer. Now, I know I say it only takes 2 to 3 months to really dial it in, and I would say yes, that can be true, but then something happens and like you get a new job or you have a child or you move and it has to be, revised so that it meets your new life circumstances, and that's okay too. So that, my friends, is the very simple 5-step budgeting plan. Let's recap what we've learned, okay? Number 1, budget gives you control and freedom with your money. Number 2, you just have to start by understanding your income and expenses. Then, once you've created your budget, you are going to track, adjust, and work on keeping improving. This isn't perfection. This is just trying to get you at a starting point where you see where your money is going and you can make better decisions on spending it in ways you want. Remember, this is a skill. It gets easier with practice. I wouldn't expect you to get fit after one workout. The same applies to financial fitness. The most important step is to start. Even an imperfect budget is better than no budget at all. If you enjoyed my content, I hope you will drop some information about it in the comments below. If you found this helpful, please hit the like button and subscribe for the next video in our series, Becoming Debt Free. And while you're at it, grab our free quick start budgeting planner below to help you get started today. Until next time, remember, when you control your money, you control your future. Thanks.